Assalamualaikum and good morning to Encik Hasham. Today, we will present problem case DPA 50153 Audit 2. My name is Badrul Amin bin Nur Azizam as a team leader for this team, and my team members is Brian Yap Jitrong, Muhammad Rahimi bin Rabiato, and Ahmad Razihiman bin Azrul Nazli. Problem case. You are an audit manager of Checkup audit firm and have received an engagement letter from Sepakat Berhad, an institution which provide a range of financial service including loans. Your firm has audited Sepakat Berhad for 10 years and the company years end is 31st December 2021. At the end of August, Sepakat Berhad financial controller has left the company. The finance director, who is the sister-in-law of one of your audit engagement partner, has asked if a member of the audit team can replace for 3 months to act as the temporary financial controller. You also aware that 2 of your team members have significant loan owing to the company. The finance director has informed the audit engagement partner that when the audit is complete, she would like the whole team to attend an evening watching the national football team play a match followed by a luxury meal.
Good morning, Mr. Hasham. My name is Brian Yap Jitrong with the matrix number of 01DAT20F1009. Now I'll be explaining about 5 ethical threats which may affect the independence of Checkup audit firm as an auditor of Sepakat Berhad. The threats are familiarity threat, self-interest threat, self-review threat, and intimidation threat. Familiarity threat and self-interest threat is found in the situation where the audit partner and the finance director both have family relationship established by marriage, whereby the finance director is the sister-in-law of one of our audit engagement partners. They both exert significant influence over the subject matter of the audit engagement, and they both hold senior positions. There is threat where they may place their family relationship above the needs of users of financial statement. Next, self-review threat, familiarity threat, and self-interest threat arises in the situation where Sepakat Berhad's financial controller has asked if a member of the audit team can act as a temporary financial controller for 3 months. The team member may be required to prepare records and schedules which support the financial statements and is then part of the audit team's responsibility for auditing it, creating self-review threat. This audit member has joined audit client as an employee in a position to exert significant influence over the preparation of the client's accounting records or the financial statement on which the firm will express an opinion on. In Part A, Bylaws on Professional Ethics, Section 524, stated that a firm must ensure that no significant connection remains between the firm and a former audit team member who has joined the audit client. Temporarily acting as financial controller means that the audit member has joined the audit client, thus leading to potential familiarity threat and self-interest threat. Furthermore, self-interest threat arises when the audit team member has significant loan owing to Sepakat Berhad. According to Part A Bylaw on Professional Ethics, Section 511, a firm, a network firm, an audit team member, or any of the individual's immediate family shall not make or guarantee a loan to an audit client unless the loan or guarantee is immaterial or unless the loan or guarantee is made under normal lending procedures, terms, and conditions. If either of the loans has any preferential terms such as rates or repayment periods, then self-interest threat will arise. Self-interest, familiarity, and intimidation threats may be created by accepting the gifts from audit client. In this case, the financial director would like the whole audit team to attend an evening watching the national football team play, followed by a luxury meal. According to Part 3 of Professional Accountings in Public Practice, Section 340, accepting gifts is generally permissible if the value is clearly insignificant. However, in this case, the gift, which is luxury dinner, is significant and cannot be reduced to an acceptable level, therefore leading to potential self-interest threat, familiarity threat, and intimidation threat. That's all from me. My friend will continue this presentation by clarifying each threat, whether under independence of mind or independence of appearance. Thank you.
Assalamualaikum warahmatullahi wabarakatuh to Encik Hasham. My name is Muhammad Rahimi Bento. My metric number is 01DAT20F1007. So today I will classify each threat whether under independence of mind and or appearance. Independence of mind is defined as the state of mind that permits the expression of a conclusion without being affected by influences that compromise professional judgment, thereby allowing an individual to act with integrity and exercise objectivity and professional skepticism. Independence of appearance is the avoidance of facts and circumstances that are so significant that a reasonable and informed third party would be likely to conclude that a firm's or an audit or assurance team's members' integrity, objectivity, or professional skepticism has been compromised. The threats classified under independence of mind are firstly, the situation where the finance director who the sister-in-law of one of the audit engagement partner. There is a family relationship bond by marriage which might impair the expression of a conclusion without being affected by influence through family relationship. Secondly, the situation where the finance director asks if a member of audit team can act as the temporary financial controller for 3 months. The position finance controller held by an audit partner might make decisions or perform in the prior period while employed by the client is to be revalued in the current period as part of the current audit engagement. Therefore, the audit member might fail to act with integrity and professional skepticism. Next, the situation where two audit members have significant loans owing to Sepakat Berhad. These loans might be material and is not made under normal lending procedures, terms and conditions such as mortgages, bank overdrafts, and car loans, as Sepakat Berhad is not a financing entity. As a result, these two audit members may not be able to exercise objectivity and express a conclusion without being influenced by Sepakat Berhad. Furthermore, independence in appearance is found in the situation where the finance director invites the whole audit team to attend an evening watching the national football team play and a luxury meal after that. This situation is significant that a reasonable and informed third party would be likely to conclude that the audit team members' integrity, objectivity, and professional skepticism has been compromised. The luxury meal is the most significant hospitality as it cannot be reduced to an acceptable level by applying any safeguards.
So now, me Ahmad Razi Hilman will present for the question number 3. For each trade, explain how it might be reduced to an acceptable level. Firstly, for the situation where familiarity threat and self-interest threat exists when the audit partner and the finance director both have family relationship established by marriage, it is advisable for the audit engagement partner to be removed and an alternative partner be appointed. Besides, the audit firm can involve another firm to perform or reperform part of the engagement to decrease familiarity and self-interest trait. Secondly, the self-review trait, familiarity trait, and self-interest trait that arises in the situation where Sepakat Berhad financial controller has asked if a member of the audit team can act as a temporary financial controller for 3 months can be reduced by clarifying which area the team member will assist Sepakat Berhad and how will the audit member be involved in dealing with items related to the financial statement. On the other hand, the request from the financial director should be politely declined or the team member should be removed from the audit of Sepakat Berhad to effectively remove the trade. Furthermore, in the situation where the audit team members have significant loans owing to Sepakat Berhad, which cause self-interest trade, the trade can be reduced by reviewing the loan and ascertain whether they are in any way preferential. The term should either be amended or the audit members be removed from audit team if the loan were to be preferential. Besides, the trade can be reduced by changing the role of the members on audit team or the nature and extent of the task the individual perform. The audit team should also have an appropriate reviewer who was not an audit team member review the work of the individual. Lastly, in the situation where the finance director invited the whole audit team to attend an evening watching the national football team play and have a luxury meal after the match, causes self-interest trade, familiarity trade, and intimidation trade. To reduce this trade, the audit team should evaluate the significance of the hospitality and entertainment. The audit team can have a reviewer who is not involved in providing the professional service, review any work performed or decision made with respect to the client from which the accountants accept the inducement. In terms of luxury meal, which is significant, the auditor should return the inducement as soon as possible or politely decline the invitation. It is likely the football match and luxury meal for the whole team has significant value. Then this offer should be politely declined. So that's all from our group. Thank you.